Hey everybody, it is Wednesday, the 10th of August. Let's look at this market. The S&P lost 54 cents. We're starting out here with a 2-minute chart, and you can see that today's volume weighted average price, which began right up here, we were below for most of the session, and that was reason to look for further downside and not trust trying to purchase. We are, of course, also below the 5-day moving average, but look at how we came right down to daily S2, and that's basically where the low is found. So right now, when we look at the 5-day moving average, which is the blue line, the blue moving average, of course, we closed just below it, and we also closed below some important volume weighted average price levels. So let me just clear this all up, and we'll start out with, since this gap, we're below that volume weighted average price, as well as today's, as well as Tuesday's, and week to date. Now, when we take a look at month to date right here, or off of this low for the month, you can see that we've got a little potential support down in this area, 217 to 217.10. I think it was Eric that also pointed out that on the so far what we've seen for the range in the S&P 500, you can see that the 38.2% retracement would bring the market right back down to this level as well. So it seems as though, yes, we are below a 5-day moving average, but that 5-day moving average is advancing, and we've got to be a little bit cautious here. The light turned from green back to yellow right now, and when we back this up, of course, we have to consider where we've just come from. We broke this range, and now this is what we want to see hold as support. So really 217-ish is going to be pretty important here, and as I mentioned, when the market broke down below this level and below that 5-day moving average, we just changed the light from green to yellow. So just a little caution here. Getting back above this range would turn it back to bullish. I think back above 218, but right now we're just going to look at this as a small pullback. Maybe it will turn into something bigger, but right now the odds still favor upside based on the rising 5-day moving average, the rising 10, 20, 50, 100, 150, and 200-day moving averages. The Nasdaq was down 30 cents today, and when we look at this 30-minute chart, I've got some of these similar volume weighted average price levels. We can start with the 15-minute chart. And you can see since the beginning of the month, let's just clear this off and do it together using the volume weighted average price tool from today. Here we have since Tuesday, and this is week to date. This is since that gap higher. So you can see we've got a cluster of volume weighted average price levels above us that could potentially offer a little resistance. But again, we're in a primary uptrend. When we look at the volume weighted average price from this low and from the beginning of the month right here, our similar type of potential support in the Nasdaq would be down near 116, and that is prior resistance in here as well. So we're just basically, the Nasdaq actually held up a little bit better, and it's going to take it, it's going to have to get back above this level right in here, 116.90-ish, to become bullish again. Right now, it's just neutral, so it's not, something to be concerned about. And again, we're not here to predict, that this is the end of this run. We're here to observe that, if this level fails to hold, then we will probably quickly come down towards that 116 level and to be positioned properly, which means reducing risk, market risk, that is. Or to be, if you're on the sidelines already stopped out in cash, then you look at it and say, well, maybe back above 122 in the Russell 2000 gets this bullish once again. Right now, we still have a rising 5-day moving average. We're on the volume weighted average price from this low right here, for that is for this month, and the month to date volume weighted average price is just below as well. So this seems like the right place for this market to try to find its support. We could draw Fibonacci on here as well, of course, and you can see that here we've got a 38.2% retracement, which is achieved today. So it's tough to make a case to try to be bearish on this market when we have these longer term trends higher, and what we're looking at right now just look like pullbacks within an uptrend. The semiconductors pulled back 46 cents today. It's right on that 5-day moving average. It's also right on this prior little band of resistance. Anytime a market has extended and run like this, you have to be careful with it. But we're above some pretty important volume weighted average price levels, and we also have kind of the same thing. We have a couple short-term VWAPs just above. So I think we need 6
64.50 to be bullish again. Now we're cautious in here, and if we break down, we would expect that this 63.50ish area is the likely area for support. And I don't want to think too far in advance, but if it broke down, then rallied up and found that as resistance, then maybe it's something bigger. But we don't have any of that evidence right now. Just like we were talking about in the biotechs this afternoon, that this prior resistance has the potential to become support. But when we drill down to the 15-minute time frame, you can see we are, today we made a lower low below the declining 5-day moving average. So at this point right here, this is where we turned negative on the biotechs. Negative from an intermediate term perspective. The question is, does that make it a good short sell? Well, for a day trade, sure, but for a longer term, when we have this potential support coming in down here, when we take a look at the volume weighted average price year to date, it's pretty far down. From this low, it's pretty far down. So, it has you could make a case that it could break down, but right now I just don't think it's worth it when we're coming into this area, except for shorter term trades. Apple was down 81 cents in this stock. We can take a look at the volume weighted average price from this month's low and from the beginning of this month. They're still below us. We're still above a rising 5-day moving average, and it really is only below not even the I'm sorry, I guess it is the week to date volume weighted average price, which was right here. But from this gap, we're pretty much right on it. So I think that this is going to be an important level, and you want to start getting a little bit more defensive in terms of Apple right now.